Hi, I'm Todd Rosenbluth, Head of ETF and Mutual Fund Research at CFRA, and I'm joined by Aniket Ullal, who heads up our ETF Data and Analytics. Aniket, thanks for joining me.
Thanks, Todd. Looking forward to our discussion.
So my pleasure. So we've got a real big announcement that we at CFRA are sharing with our clients and the broader investment world about our expanded ETF data. Can you tell the team about it?
Sure. So this is an exciting expansion of our data coverage. As you know, for many years, we've had holdings data both for US ETFs and Canadian ETFs for a long time. We've also been publishing classification or reference data globally for many years. But what we didn't have was holdings coverage for Europe and some key Asian markets. And what we're announcing now is our expanded data coverage for all of Europe, as well as 5 key Asian markets, including important markets like Japan, Australia, and China. So once we have this expanded coverage, which we're announcing now, we'll have over 90% of assets in the world in our holdings data set. So we'll have a complete coverage for classifications and very exhaustive coverage as well for holdings. And that's exciting both for us as well as for our clients and investors.
It allows us, as you mentioned, to be able to compare and contrast certain geographies. So the US is the largest of the ETF markets. Europe is the second largest. And when we've dug into the data, you and I, we found some similarities, but also some key differences between the United States and Europe. Do you want to kick that off and then I'll join in?
Sure. The Europe is a very interesting market because it is a large market. It's about $1.4 trillion in size, which is of course a lot smaller than the US market, which is almost 6 trillion. But there are some key differences. The first being that Europe is a very, very fragmented market. So if you look at the number of primary listings in Europe, which is a little more than 2,000, that's roughly equivalent to the number of primary listings in America. So in terms of primary listings, it's actually kind of equivalent. But where things get complicated in the European market is there are a lot of cross listings. There are almost 30 exchanges across the region that list ETFs. They're listed in multiple currencies. These ETFs are registered in various domiciles. This is really contrasts with the US market, where we only have 3 primary exchanges, and most of the trading and the volumes is concentrated in these 3 exchanges, and we have one centralized clearing corporation. So all of that makes Europe a much more complicated and fragmented market than the US. It's something I know, Todd, you've looked at in your research as well.
We have, and it's also interesting when we dug into the data is the differences in where the money has gone at an asset class level. So the United States remains dominated by equity ETFs tied to the S&P 500, tied to MSCI, EFA, and other of these equity benchmarks. Whereas the European listed market, we have more exposure, or there's more client assets in fixed income as well as commodity that rounds out and provides more diversification to the overall asset base. And the asset managers in particular have more of a specialty in individual segments of the market.
I think this is where ETF data really becomes important, because given the fragmentation in the European market, given the number of multiple listings, given the multiple currencies and the various domiciles, it's important to be able to track all of that data, link it back to the primary ETF, and get accurate holdings and reference data, and which is why we're really excited about expanding our coverage to that region.
Agreed. And so if we look at even a higher level in terms of the league table, the largest asset managers that have a presence in Europe, some of those have a presence in the United States. BlackRock is the dominant player, but we're seeing potential shakeup in the league table through acquisitions. Do you want to talk about that and what we're seeing with our data?
Well, I'd characterize the European market as way more fluid in terms of the league table than the US market. As we know, there's 3 big players in the US, BlackRock, Vanguard, and State Street. Together, they've had 70-75% market share for many years. And it's been hard for some of the other issuers to catch up and really gain market share. In fact, the top 5 issuers in the US take the lion's share of assets. This is not necessarily true in Europe. BlackRock is the largest player there as well. But after that, there's a lot of opportunity for asset managers to gain assets, grab market share. And some of the recent transactions we've seen happening in Europe can reflect that. The fact that it's a much more fluid league table, the fact that asset managers can, through acquisition or mergers, grow their market share. So it's a very dynamic and fluid league table. And certainly, I think we can expect to see some interesting activity over the next few years.
Right. So specifically, Amundi and Lixor, when they come together, will become the second largest ETF provider based on our data, with about a 14% market share, leapfrogging DWS. But they'll also provide more, as a combined entity, more geographic diversification. So exposure more to the United Kingdom, to more of the rest of Europe. It's going to provide a much more formidable player to compete with BlackRock than there is today.
Todd, you and I have been in the industry a long time. We'll remember the time when Barclays sold what was then the BGI iShares business to BlackRock. It was an absolutely transformative deal in the industry and really transformed asset management. It couldn't have been a better deal for BlackRock. And honestly, I think the management at Amundi would be looking at that deal and hoping they have a similar outcome. Honestly, anything even close to that outcome would be an incredible outcome for Amundi. So it makes sense that they would want to do something like this. We've seen this happen before, right, in the US, and certainly being able to grow, scale up, lower costs through an acquisition like this is a very valuable thing for a franchise like Amundi.
I agree. And let's touch on one last point about the differences between the United States and European ETF markets. ESG is a much larger presence. It's become prominent there from an institutional investor basis. Do you want to share some of the data that we have?
Sure, absolutely. It's interesting. Europe is one market that's always been ahead of the US and North America in terms of ESG. There are certainly other aspects where America has taken the lead in the ETF market, but when it comes to ESG investing, Europe has always been the leader. And this is really reflected in the assets. If you look at all ETF assets in Europe, 10% of them are linked in some way to ESG themes. That's a very significant number for a market of that size. If we look at the US market by comparison, of course, it's a much larger market, but the assets tied to ESG is less than 2%. Now, we all know it's growing very rapidly. ESG is being adopted extremely fast in America, but it's a long way to go. And it's very clear that as far as ESG and thematic investing goes, Europe has a lead. It's always been a leader. And I think we can expect that to continue growing in the European market.
I'd agree. And these are just some of the data points that we at CFRA are excited to be sharing with our clients with our expanded data set. You can learn more about our research at www.cfraresearch.com or contact Aniket or I. We're on social media. We'd love to hear from you and be able to help you and your clients better sort through the global ETF universe. Thanks a lot, Aniket, for joining me.
Thank you, Todd.